Good morning and welcome to the start of a brand new week. It's the 25th of April. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning.
Good morning.
You both okay?
Very well, thank you.
Yeah, ready to go.
Excellent. Well, let's get straight into it then, shall we? Let's first of all get stuck into the latest headlines, so then we can get stuck into the bit everybody wants to see, which is the charts. So first of all, the headlines: risk appetite slides and equities are under pressure. There are very strong expectations now that the Federal Reserve will tighten policy aggressively over the next few months in order to combat inflation. Confidence in the global economy has deteriorated, with expectations of a prolonged conflict in Ukraine increasing fears, especially given the impact on inflationary pressures. The Chinese coronavirus developments have also increased fears over the global demand outlook, while supply side difficulties are liable to increase further. In this environment, equities have declined sharply and risk sensitive currencies look vulnerable. In terms of what's going on with China, confidence in the economy overall deteriorated with the threat of more extensive lockdowns, given that coronavirus outbreaks have spread to Beijing, which will increase the threat of further lockdowns. As a result of all of what's going on, we've seen the dollar continue to move to the upside, strengthening further to 25-month highs this morning. Higher short-term interest rates have boosted the currency on expectations of aggressive Fed tightening. Yesterday, we saw Emmanuel Macron was re-elected in France. The exit polls for the second round of the French presidential election reported a comfortable win for President Macron, with around 58% of the vote compared to 42% for Le Pen. Final results gave Macron a 58.55% overall majority, but the turnout fell from 2017, and there were a number of there was a high number of spoilt ballots, as many voters failed to back either candidate, which is maybe why we're seeing a little bit of risk off, particularly in the euro today. In terms of the latest data, the Eurozone economy remains resilient. The PMI index retreated to a 15-month low, but slightly above the forecast that was set by analysts. In terms of the US PMI data, that strengthened to a 7-month high. However, there was a notable retreat in the services sector index, with a 3-month low of 54.7, which was below the expectations of 58. On the UK PMI side of things, the manufacturing index edged higher to 55.3 from 55.2 previously, and this was above the forecast of 54. So all in all, the data was pretty optimistic, which is good. However, we are seeing a pretty brutal looking risk off move so far today. So I don't want to waste any more time. I want to get stuck into these charts right now. Steve, do you want to kick us off?
Yeah, sure. I'll dive into the commodities, which took a fair old whack as well. And we can see that on the weekly chart, just a reminder, we're in a fifth and final wave before the correction. Really need to see a break of the $92.50, $93 level in WTI crude oil, and probably need to see a break down below $95 in the Brent crude oil for this correction to sort of like really get some gas. On the gold side of things, we've also seen a bit of a retracement, and we can also see on this weekly chart we've got a bit of a crossover on the EMA, and that's on the back of last week's bearish outside candle, which we can see pretty clearly when we drill down to here. So here, even here, we can say this is an A, B, C, D. So if we get like a uniform type of correction, we're heading down towards this support line around about the 1841 level. So plenty of scope on the downside. The next support level probably around about $1,900. We know there's a decent support just below there, where we've hit a couple of lows around 1890 and 1895. But for me, this opens up further potential on the downside, and we should see this accelerate this week. Weekly chart, I took a look at this for gun to head. We'll go through that later. On the silver, again, same bearish outside candle. So expecting a bit of an ABC correction, and next real level of support down around about the $22 mark on that. Copper was another one that has been highlighted recently. Obviously, the precious metals have been pushing towards like highs we haven't seen for many years, and there's been a bit of a turnaround also in copper. Next level of support around about the 445, 450 area, which we're trading around now, and yeah, looking for further downside on all of the precious metals. Cryptocurrencies had a turnaround also. Let's take a look at Bitcoin. This chart, again, a weekly chart. Let's get rid of this flag, which we can highlight. So last week's candle looked pretty promising up until the final sort of few days of the week. This weekly chart runs from a Monday to a Sunday, and ended up being a negative candle last week. Real rejection, almost doji-like, where it's opened and closed at the same level, but at one point prices were engulfing the previous week's candle, so it looked pretty good at one point, at one stage. Let's look at the daily chart, and we can see the turnaround really happened on the 21st. That's where on the 20th we got a doji. The 18th was the bank holiday. That was a bullish outside candle, and we had 3 further higher days that week. Stalled around about 43,000, so that'll be our next resistance level for Bitcoin. And now we're back, and we've broken down below last week's low on last Monday's low, which is down below 38,500. We should see decent support all the way down to 37,000. 37,000 for me is pretty key. We've got this bearish flag type candle, this channel, which is upward moving, upward sloping. But it's if you look at the overall picture, we're expecting for a break lower, if anything. So that level really comes in to test around about the 36,500, 37,000 level for me. And yeah, doesn't look too clever for many assets this week that I've seen. I don't know about you guys.
There isn't really much positive at all from what I've seen. So let's get stuck into FX. So where there is positivity, of course, is in the dollar index. So we continue to see money flood into this, and it really does look quite bullish overall. We've taken out the latest resistance level that I've got here at 101.40, let's say. So now headed towards this 102.98 level, which was the previous highs that we saw at the height of the pandemic. So it looks pretty much set to get to those levels. I can't see anything really destabilizing this at the moment. There's no sort of formations of tops taking place or big reversal candles for now. So it looks like higher prices are set to be seen. Obviously, this is going to have a negative impact on euro US dollar. We are taking out the lows here on that. So the previous lows that we posted here on the 14th of April have been clearly taken out. And now we're targeting these lows, which again, on the flip side of what we just looked at in the dollar index, these are the lows that we saw at the height of the pandemic in 2020. So we look set to head down to that 106.35 level. If we take a look at cable, similar sort of situation. The dollar strength really quite impressive. We saw a horrible candle formed on Friday on this chart, taking out these previous lows here around 130.00. We then expected to see a move down to this 50% fib line at 28.46, and we've absolutely smashed that as well. No sign of this slowing down whatsoever. 2 really nasty looking down days have been formed on this. So we've got some lows here at 126.75 to potentially target in the short term. Below that, we'll be looking for a 61.8% Fibonacci level at 125.07 to target on the downside. So looking pretty ugly there. If we take a look at Aussie versus the US dollar, this was actually holding up quite well compared to some of the other currencies due to the influence of commodities on the Aussie dollar. But big breakdown here as well, and looking pretty ugly. Nothing nice to say about that at all, really. Looks as though we're going to continue moving lower, probably down towards these lows here that we posted back in late January, around 0.6968. Moving on to the indices, we can take a quick look at Aussie to start. That has failed at this major resistance level here that we highlighted over the last couple of weeks at 76.20-ish. As you can see, big move to the downside on Friday and continuing that lower again today, down by 0.7% as things stand. China taking the worst performing market accolade this morning, down by 5.4%. I guess that's down to what we're seeing with the situation on COVID and potential lockdowns in Beijing. Steve was talking about the breakdown from this for many weeks and months, which finally occurred. We saw a big slide down to these lows around 12,410. We saw a bit of a correction, but now we're headed back towards that level again. And if that gets taken out, then we're looking for much lower prices potentially on this. Taking a look at the European markets, the DAX is down by 0.8% as things stand, having failed into this downtrend resistance, posting that shooting star candle. We've continued to see more downside. We've got 50% fib to target at 13,679. That's the next level to watch there. If we take a look at NASDAQ, that had a very horrible day as well on Friday and on Thursday as well, actually. So 2 big down days in a row. More weakness being seen today, although it is outperforming the rest of the markets at the minute. But we're looking for a retest of these lows here that were posted in mid-March at 12,950 approximately. And if that gets taken out, then there's a hell of a lot of fresh air for this to move into on the downside. And I think we would have completed a rather large top on that. Let's take a look at the S&P 500. This is obviously a broader look at the US markets. 500 stocks as opposed to 100 in the NASDAQ and 30 in the Dow. Again, looks like a big kind of top pattern forming here on the charts. What's going on with this? Who's put the color as white? That's no good to anybody. Yeah, so potentially a massive top taking place here. Big load of downside moves over the last couple of days. Big engulfing candle on the 21st, backed up with further losses on Friday, and we're looking weaker again today, down by 0.4% as things stand. So I think the key levels to watch here really are these lows in this kind of region. If these get taken out, then I think the overall picture for the US markets looks pretty scary, really, and we could see a continuation lower for potentially many months on that. So yeah, not looking great. Finally, FTSE 100 failed at resistance at 76.78. 3 consecutive large down days on the FTSE 100 and looks set to continue moving lower, I think, in the short to medium term. It's holding up better still than some of these US markets, but based on what we've seen today on these charts, I don't think I want to be buying any of them at the moment. Sorry for the negative start to the week, everyone.
Yeah, that's how we start.
Yeah. Okay, Jamie, what's going on the stock side of things?
Well, we don't have much more positivity to follow that up, but we will start with our gainer and loser of the week and of the day. And looking back on Friday, we have this BKEP, which is Blue Knight Energy, which jumped 38% off the back of being or is going to be acquired by its general partner Ergon. So that was a nice move. Nothing really technically to look at there. Just a really big gap up. Next, we'll jump into our biggest loser. It's not the biggest, but it's one of them. It's one that's interesting, and it's this BBAI, which says bye-bye if I'm reading it correctly. So yeah, and bye-bye, it's done. You can see we had this move higher, and we've got a bit of technical analysis to do here. There's a symmetrical triangle type pattern, which once it broke through this kind of support, this slightly upward trending support, got that close below the previous wick, and it's moved considerably lower. So yeah, nasty day for bye-bye there. We'll jump into some of the more well-known stocks, and if I change this to a percentage on the right, you can see here that it's just a sea of red from Friday's trading. Which kind of tells a story, really. We'll jump into Disney though first. Disney was one I think we looked at. We saw this descending triangle pattern taking place, and it's just shot lower again on Friday, actually gap lower, and then closed at the low of the day as well, which is very bearish. And the weekly candle is 10 times worse, really, because you could see from the start of the week, we had this. I was about to point at the screen, but that wouldn't have done anyone any help. But we had these wicks coming in at this key support of about 130. It wicked off at once, wicked off it again, and this really significant close through last week now on increased volume. So not looking so hot for Disney. I've drawn out the next target to be this kind of 78.6 fib level from the COVID lows to the all-time highs. So judging by how this chart looks, I think that's probably the next logical stop for it. We'll jump into Moderna. Nothing really new to show here. This head and shoulders pattern we identified a couple of weeks ago is looking like it's playing out quite nicely. We also took a bit of a look at the potential for an inverse head and shoulders on the shorter term. I'll just quickly draw out. We had the left shoulder here, the head here, and the potential when it was coming back up here for this to form the right shoulder, but that seems to have failed and it's heading back towards this support level of 120 or so, which is pretty key for Moderna actually. A close below that on a weekly level would be problematic, to say the least. We'll jump into Moderna, and this is one we actually looked at putting a signal out for, which isn't looking too hot at the moment. We've got this key support level for Microsoft here, about 275. Last week we kind of, you see, I don't like this at all from a long perspective. We have these wicks all occurring around here, and now we've got this shooting. Let me move this out of the way so we can see it a bit clearer. This shooting star on the weekly, which isn't looking good. We've also got earnings this week. Maybe we can jump into some of the earnings calendar in a moment. But yeah, this isn't the kind of price action I like going into earnings, and problems ahead possibly for Microsoft. On a similar
the thing I like about that, Jamie, so that's a shooting star if it's at the top of a rally. When it's at the bottom, it's actually an inverted hammer. Right. So if you think about, if you flip that round the other way and you had a big dip like you did a few weeks previously, then that is it's like a bullish. It's called a bullish hammer. Yeah. Now it's an inverted hammer, but also that inverted hammer can sometimes be quite positive. It doesn't look positive, but it looks like during the week you had buyers coming in and really trying to sort of force the price back up to fill that gap. And they failed, but it showed the willingness of the buyers to attempt to do that. So sometimes, although at the top of the chart, I'd go, yeah, absolutely, that looks really negative. At the bottom of the chart, it does look, it's still a negative candle, but there's almost like a warning sign there that there is potential. It looks rubbish, but there is potential for a turnaround still, even if that closed. So that's closed on the weekly chart, hasn't it? So yeah, obviously, depending on where it opens this week and price action this week, that would either confirm a rejection or some support coming in, or it will just go, see you later, sayonara, baby, like everything else feels like it's going to do at the moment.
Yeah. So I mean that's the thing, and thanks for pointing that out, because really what's important here is the kind of follow through from this. Yeah. If we get kind of further downside, it kind of shows that, as you were saying, the buyers have failed to kind of regain control. So we've got an important week up ahead for
that gap. That gap above would sort of, like, if I was long, I'd be thinking, I'd take a little bit of solace from that. I'd think, okay, I've still got a chance here. But yeah, price action this week is absolutely key. And it feels like a Monday, like a black Monday at the moment. But we haven't, we're not seeing the downside levels yet. But yeah, watch out for that one.
Yeah, yeah, thanks for that, Steve. There's a lot of kind of key levels being looked at, and maybe this illustrates your point a little bit better. What I was trying to say. So we kind of, again, it's not so much of a shooting star, but I mean, would this be more what you're talking about? Because this kind of came at a resistance level. So I don't know if this is more of a
it's exactly that. That is a bit more bearish, because we sort of like hit the resistance level or previous resistance level as well. And we saw rejection previously, and we've seen rejection again. So that's definitely more of a, when you see that at the sort of like, it's obviously not right at the top of the trend, but it's almost a correction within a downtrend. So yeah, definitely that.
Yeah, so this is Nike here again, and one we tried to jump in on, but I think it actually gapped below our entry, which is kind of annoying. We put it in here, but that looks to be heading towards this 50% fib level, which we've got from, again, COVID lows to all-time highs. A fib level that's been tested once, so I think if we do start seeing a test of this 120 zone, it could open up a move lower if we do get a significant close on a weekly level. No, I've actually said every week just keeps on falling. I think I've got $40 written here. I think that's where that's heading. It's below all relevant Fibonacci levels, so yeah, we don't need to look at that too much. Nvidia, this is maybe a more significant close, way below all these wicks. So anyone that's kind of, and maybe this is more me asking, but we've got buyers coming in here for the kind of shorter term trader. A lot of them, from my understanding, will be looking to set their stops kind of under this level. And with a close like this, is that something that could kind of take out a lot of those stops and perhaps is a sign of more bearish price action to come after that?
Yeah, it looks like it. Looks pretty horrible, doesn't it?
Yeah, it's not a good looking chart at all. I think we actually tried to get long on this last week. I think we spoke about it and how we were looking for that instant reaction from this level. And when we didn't get it, the writing was kind of already on the wall. So, this isn't a nice looking chart at all. There's not many nice looking charts these days. It's pretty rubbish all around. So we'll move on in a sec. But the last one was checked was Facebook or Meta platforms, things it's known as now, which obviously had this really bad earnings report back in February. We've got earnings, and we can double check the date in a sec. We've got earnings coming up this week, I believe, off the back of some more pretty poor price action. So, again, you don't want to kind of preempt an earnings report by any means, but when you've got this negative price action coming into it, I think that's a bad sign. But obviously, a bit of a wait and see on that. So we'll call it a day there on the stocks. Maybe we'll have a quick look at the corporate calendar.
Yeah, I think so. So this is our corporate calendar provided by Acuity and powered by Dow Jones, and it's pretty cool. Gives us a good insight into what's reporting, what numbers are expected, what has happened previously, how close the analyst forecasts have been to the actual results, and what kind of surprises we've seen on that, and what that's had impact that's had on the price as well. One of the issues for this week is that there are so many companies reporting. So we've got 37 companies reporting earnings today, 100 tomorrow, 182 on Wednesday, and 231 on Thursday, then 47 on Friday. So it's a very, very busy week, and probably not a good time for this to come, given how markets are looking at the minute. Any kind of big misses on some of these big names could have a pretty severe impact on the sentiment in the market at the moment. Looking at the big names today, it's only Coca-Cola really that I can see. I mean, obviously they're all kind of big companies, but Coca-Cola is kind of the biggest name that looks like it's reporting today. We will try and whittle this down to some of the bigger names throughout the week and try and give a little bit of an insight into what to expect from these numbers throughout the trading week. Okay, so next step for us is the gun to the head challenge. So this is where we all try and pick a trade idea live on the video and monitor the success or the failure of those ideas throughout the trading session. And we must all pick an idea. We must all provide you with a stop and a target. All these ideas are placed at market and they are published to our TradingView profile. These ideas expire at 9 p.m. UK time, or when the stop or the target is hit. And if you want to see how we've done on these ideas, then do go check out our TradingView profile. These are the ideas from last week. So I went long of Euro US dollar, very speculative long call, hoping that we'd see a bit of a bounce. We did initially, actually. We got up as high as 108.43, but then absolutely died. And as you can see, the importance of a stop loss highlighted there because it has broken through those levels and continued to move to the downside. Jamie was looking at Ripple. At the 9 o'clock close, I think he was 0.43 R on side. If we just click the play button. But as you can see, he did go on to reach that target, but it was well after our expiry time. So if you did follow Jamie in and hold, you'd be looking pretty nice on that as it stands. And if we look at finally the shining light on the session, Steve and his silver trade, that worked out very nicely indeed. He was 2.5 R on side at the close. It got very close to that target, Steve. We're talking a couple of ticks.
I know. That was quite quickly. Within the first couple of hours, it actually sort of like stalled like a cent in front of the target. I thought, that's all right. That'll hit. If you're managing something like that, that's quite a difficult thing to take. But definitely. Eventually got there. But after the close? But
yeah,
it's
2 o'clock on this morning, actually. 2 o'clock this morning hit target. So yeah, very nice calls anyway, nonetheless. So well done, gents. So I think we've all got a bit of a challenge today. ahead of us to try and pick something in these markets. Who wants to go first?
I don't mind going first.
Go on, Em.
Weirdly enough, it is a sell trade idea after what we've just talked about. So let's take a look at this. So this is a 4-hour chart on the DAX. Now, I highlighted this head and shoulders formation. Well, it would have been at the start of April, 5th, 6th of April, and looked to target a move to 30,756. Anyway, didn't play out, and we had this intermonth rally. So what we can do from this is, and that failed to really close above the right shoulder that I'd drawn in, but now we can redraw this, and this is a little more ominous looking for the actual overall index itself. Now, for me, like a downward sloping head and shoulders neckline, a downward sloping neckline is much more bearish and could be a much more aggressive move. Similarly, an inverse head and shoulders, if you have an upward sloping, again, could be a much more aggressive move. So this is looks like what's playing out. We had let me just get rid of it. Oh, get rid of this for a second, because I want to show you on the, maybe I'll show you on the daily chart and really show that shooting candle that we were just discussing with Jamie here, head and shoulders. Head and shoulders up here, left shoulder, neckline, head, bottom of the neckline for the before the right shoulder, and you can see the shooting star formation, which is a negative formation, and that's been confirmed now. So further downside expected. So I'm going to jump across to the DAX on the hourly chart and go, okay, you're really trying hard in the last hour to rally, but we're putting an end to that, son. That's the end of it. Inputs. So I'm going to have the stop. Let me see. Yeah, don't mind doing that. I'm going to go for overall 4-to-1 risk reward on this. Really looking for some decent downside and a failure. So, and then this we want to sort of like be hitting before 9 o'clock. So something like that. So yeah, selling it 14,014. Stop at 14,120, targeting 13,590.
Cool.
Nice.
I'll go next if that's all right. So I feel like I've been the bearer of bad news today to start the week, and it's I'm going to try and give our viewers a little something back, and I'm going to try and buy Bitcoin because I know there's a big following.
Oh my God.
In the crypto space, and most Bitcoin traders tend to prefer buying it than selling it. That's cool. Highly speculative trade idea today. It seems to be testing this 38,550 level, which was a previous swing low from back in on the 18th of April, just a few days ago, and maybe a bit of a reversal taking shape over the last hour. So going to try and have a go at that. I'm going to buy it at a current price of 38,510, targeting a move up to a 38.2% Fibonacci retracement from these highs on the 21st down to these lows that we've just posted in the last hour at 40,082. Stop loss at 38,154. Looking for 4.5 R on that one today. Can't stress enough how speculative these trade ideas are. We're just looking for short-term opportunities on various charts. So that's my trade of the day today. Jamie, over to you.
Very nice. Thank you. Right. For my sell, I'm trying to buy breakouts and sell breakouts. A lot of the breakouts already happened, and they're quite overextended now. So this is what I've found this morning. It's the Swiss franc against the Japanese yen. We had this key support level close below, actually, it's the 7 o'clock candle. We got a retest of it, and it's starting again to move lower. So I'm going to look for a continuation of this move to the downside, selling at 133.72. Oh, it was lower. 72. Doesn't help my risk reward very much. So we'll move that to the top of the breakout candle. We'll keep the stop at 134.12. Let me type that in, 134.12, and the profit will be at 132.51. So we're looking for a 3R risk reward move there on the Swiss franc against the Japanese yen.
Nice one.
Decent. Let's see how they play out. So data wise today, just to finish off on the session, we've got at 9 o'clock, so in 28 minutes time, we've got the German IFO index. Then at 4 o'clock today UK time, we've got the Bank of Canada Governor Macklem testimony. So keep an eye out if you've got any exposure to the Canadian dollar later on today. Throughout the rest of the week, as we mentioned, there is a lot of earnings due out. We'll try and do our best to break that down and give you an insight into the biggest names that are reporting this week. Other key events to focus on the 27th, we've got the Australian consumer prices, which will be due out. We've also got a Bank of Japan policy decision on the 28th, and also the US GDP latest reading for the first quarter on the 28th as well. Anything else to add, gents?
No, all good here.
All good.
Superb. Okay, let's call it a day there then, and we'll be back tomorrow morning.
Thank you.
Have a good day, everyone.
Cheers.
Goodbye.